The broadcast is now starting. All attendees are in listen-only mode.
Hi, everyone, and welcome to Basics of Binary Options and Knockouts. My name is Todd Rich. I am head of education here at Nadex, and we're going to be discussing binary options and knockouts. We're going to have some fun looking at those products, understanding those products, particularly since we have a lot of new participants in our markets as of late. With all of the volatility that's going on, it's providing some potential opportunities for folks. So welcome to all the new folks, and welcome back to all those who have been with us for a while. Before I start the presentation, actually, let's go ahead and start with one housekeeping item, and then I'm going to get into some fun things that are coming up that I want to make certain you are aware of. But first, let me be clear. This webinar, as are all of our webinars and all of the educational content that we present, sponsored by the Nadex compliance team. I do need to put this disclaimer up. Hopefully everyone has an opportunity to read it, but it is important that you understand that trading on Nadex does involve risk and may not be appropriate for everyone. That any trading decisions you make are solely your own responsibility and at your own risk. And then this is actually very important because I will be going over to our platform, albeit I'll be in a demo environment, but our demo environment streams live data. So we are looking at live markets. I don't want you to take anything I say today as a buy or sell recommendation. This is strictly for your educational purposes only. All right, before I get into our agenda, I do want to, actually, you know what? One more housekeeping item. I almost forgot. We're here to help you. All right, if you want to take a screenshot of this page, if you've ever got any questions, you've got any concerns, whether it's about what's going on at Nadex, about our products, if you wanted to chat with somebody about your account, reach out to us. Customer service at nadex.com. Customer service at nadex.com. Email us. And I'll even show you we have a chat function on our website, so you can even chat with some folks. I'll show you where that is. And you should also follow us on all of our social media. We're on Twitter, we're on Facebook, Instagram, YouTube, and LinkedIn. And I will tell you, today's session is being recorded. It will be available either later today or tomorrow, so you can always replay it. I would suggest visit the Nadex YouTube channel. Go to the Nadex YouTube channel, and I would also advise you subscribe to it so you can get alerts. We've got a variety of content that is up there. You may have missed it. There's some great things that we put up on our YouTube channel, so please, I highly recommend it. This will also be available in the archive on our website, and I'm going to show you where that is as well, so you can see upcoming webinars as well as where we archive everything, because I know that everyone consumes things in their own time frame, so we're going to make them available to you so that you can binge watch or consume the content when it best suits your schedule. Now, before I go on to the actual agenda for today, there is one thing I want to share with you. This is kind of cool. If you were unaware of it, we are running a contest, and I am going to bring up this page. And if you weren't aware, it's a fun little contest. If the election has not been exciting enough for you so far, let's add a little bit of excitement, but we'll make it some fun excitement. This is free to enter. All right, you put in your name, your email address, your phone number, and then you predict where the Dow is going to close on November 4th. So the election's November 3rd. Where is it going to close the day after the election? And we are giving away prizes. It's an opportunity for you to win up to $5,000. There's a chance to win $5,000. The $5,000 is going out. It actually goes to the person who is closest to predicting it. If there happens to be two people who are equidistant for somehow, which is possible, the prize would be split. So if you take a look at this website up here, join.nadex.com/predict the Dow. In fact, I am going to drop that into the chat to everyone right now, and I will try to do that again later. I'd recommend go take a look. You have until Monday to make your prediction. So I know some people want to wait a little while, might see where the Dow is and make their prediction from there. But there is definitely going to be some randomness to it because you're making a prediction the day before the election. The election's going to happen, and then it's what happens the day after the election. So I would advise get in, make your prediction, give it a shot. Got nothing to lose. The one caveat is you will have to have a Nadex demo account. If you've opened a demo account before, please use that email address. If you do not have one, a demo account, you'll be able to create one very, very easily. Process is not difficult, but go ahead and share it with your friends. It's just kind of fun. Take a stab at it. Somebody's going to win $5,000. Why not it be potentially you or someone you know? So I like it. It's kind of fun. It adds some fun excitement to the election. Go ahead and go to join.nadex.com/predict-the-Dow and make a prediction. Should be kind of fun. If you have any questions about that, I've also got my colleague Sophie in the background. This is an interactive session today. So please, as I go, feel free to ask questions. You can type them in. Sophie is back there. And I don't care what the question is, whether it's about our products, whether it's about Predict the Dow, whatever it is. She's in fact, if you could, just keep dropping a question to her just to make sure she's staying alert and awake in the background. So we do have Sophie in the background. I mean, again, we're here to help you. We want to help you. The best way that we can do that is if you ask for it when you need it. All right, here's our agenda for the rest of this afternoon or this morning. We are going to go through binary options and knockouts. I'm going to do a handful of slides talking about the products. Again, you'll be able to follow along on the slides, and then we're going to jump over to the platform where I make a demonstration of it. And again, we'll be in live markets. You'll see how these products move, what you could potentially be looking for, and how to trade them. Again, nothing is a buy or sell recommendation. The other thing I'm going to put out to you, anyone on here, if you'd like, and you would like to get a copy of the slide deck, ask Sophie. I'll see to it that she gets you a copy of the slide deck afterwards. So if you want to come back and review this again at your own pace, you'd be able to. All right, so we're going to keep it moving along. Here we go. What are binary options? And I'm going to make this, I'm going to try to keep these kind of brief, but I do like to go through the basics because when we go over to the platform, I think it's much easier to see it than to talk about it. But binary options are short-term, defined risk, defined reward contracts. So straightforward. They are short-term contracts. When I say short-term, we have 5 minutes, 20 minutes, hourly, daily, and weekly contracts for our binary options. And what is a binary option? It really is just a statement or a prediction. Okay, it's a prediction, and that prediction has 3 components to it. The first is the underlying market. What's going to happen to a particular underlying market? And we will go through the different types of markets that we've got. Then, beyond just the market, there's going to be the condition, or it's also sometimes referred to as the strike price or the level. And then there is a time frame. As I mentioned, we have short term, but there is going to be a time frame associated with each binary option, whether that's 5 minutes, 20 minutes, hourly, weekly, daily, or weekly. And the interesting thing about binary options is it doesn't matter whether you're buying them or selling them. Your risk and your reward are both capped. It is a known quantity before you even get into the trade, what you could potentially make and what you could potentially lose. And they trade between 0 and 100. So it can't go any lower than 0. It can't go any higher than 100. Those are essentially the floor and the ceiling of the price of a binary option. Now, in fact, when excuse me, I'm going to take a sip of my Bengal spiced tea. Sorry about that. As we mentioned, it's a prediction, and that prediction is essentially a true or false. Okay, either the event is going to happen or it does not. That is why it's binary in nature. You are making a prediction, and the prediction either comes true or it does not become true. And in that, we talk about that 0 and 100, with 0 being the floor and 100 being the ceiling. Those are the prices that they will eventually settle at. So if you make a prediction and it is true, if the binary option is true, it goes to 100. If the binary option is false, so the statement, the prediction does not happen, it will settle at 0. So again, that's that binary nature of binary options. It's either true and it goes to 100, or it's false and it goes to 0. All right, and what is when we look at the price of 0 and 100, and interestingly enough, each one of our binary options is worth $100. So they'll either settle at $100 or $0. So that makes it pretty easy there as well. But the actual price that you're looking at for a binary option can be thought of as generally reflecting the probability of the event occurring. And that's the probability as determined by the marketplace. If more people think the event is going to occur and they buy the contract, it will drive the probability higher. If more people think it's not going to occur, so it's going to be false, sellers would come in. And the way that you'll see that is if we have a condition or a strike price, and the market for that, the actual underlying market is the same as the strike price, you don't know whether it's going to settle above or below. So it's really going to be right around a 50% probability of potentially being true at that moment in time. And the price of the binary option will trade right around 50. If the prediction is further away from the market, if it's above the market, the probability of it happening is going to be lower because the market would have to rise. So you'll see it trade less than 50%. And if it's below the price, the price of the binary option is below the current price, because it's already trading above that prediction level, you generally tend to see it trade higher than 50. And we'll see that in the markets when I show you. And the interesting thing about binary options is, like other traditional listed options, the time to expiration and volatility of the market will be factored into the price of the binary option. The probability of something happening or not happening further away from time, sure, there's more time for that market to move, more potential possibility for the prediction to be true or false. So you're going to see that indicated in the price of the option. And just like if it's further away from time, if it's very close, if there's very little time, you'll also see that. And I will show you an example, and you'll see how dramatic the probabilities can change, particularly as you get very, very close to the settlement time. The other thing is volatility. If the market's moving all over the place, you don't know what's going to happen, and that will be factored into the price of the option. So that's a little bit on binary options. I want to leave it there for the moment. If you've got any questions, please send them over to Sophie. She's definitely there to answer any of your questions. Let's talk a little bit about knockout options and how they're different from binary options. And then we're going to jump over and do some examples, and we're going to look at the platform. So what are knockouts? A Nadex knockout is a contract that trades within a set price range. Okay. So it's going to have a price range, and that price range is between two levels. Now, those two levels, again, are the lower price level is called the floor, and the higher price level is called the ceiling. So in a binary option, we know that's 0 and 100, and that's actually where it's going to settle. It'll trade somewhere in between that. But with a knockout, it's different. It will actually give you a clear, defined range for the product. And the price of the contract it's what we call a delta 1 contract, is instead of trading a probability of something occurring, which is what binary options are, in knockouts, you are trading the price of the underlying, all right? And the value of the contract will move in line with the underlying market. So it's a little bit more intuitive when you think about trading. Is if you're trading, for instance, a stock, the price that you see in the market is the price that you see in the market. That would be the same with a knockout. That's why we call it a Delta 1 product. You are trading the price of the underlying, but with a knockout, you have a range. You have a floor and you have a ceiling around the price that you're trading. And as such, since you're trading the price of the underlying, if you think the price of an underlying, and let's just pick gold, for instance, if you thought gold were going up, you would buy the knockout. And if you thought gold were going down, you would sell the knockout. Okay. And we've got knockouts for commodities. We've got them for foreign exchange. We've even got them on stock indices. So for instance, if you like to trade the volatility of technology stocks, we have the Tech 100 Nasdaq product, which tracks the Nasdaq 100 future product. So I'll show you that. So if you thought the Nasdaq was growing higher, you could buy a Nadex knockout Tech 100. If you thought the Nasdaq 100 were going lower, you can sell the US Tech 100 Nadex knockout. So you just trade the price of the underlying market. Now, I mentioned that we've got this floor and the ceiling. This is how a knockout expires. And a knockout, it's also going to have a settlement time, but it can also end early due to price. So if the Nadex indicative index for that market touches either the floor or the ceiling, the contract will immediately settle and you would be knocked out of your trade. So if you thought the S&P 500 were going higher and you bought one and it touched the ceiling, all right, so it went up, you would get knocked out of your trade up at the ceiling for your maximum potential profit. Wonderful. You had a profit goal and you hit it. If you bought it and it went lower and it touched the floor, all right, you would get knocked out for your maximum loss. You bought it, you thought it was going higher, you were wrong, it went down, but you know your losses are limited, you would get knocked out below. It's essentially a stop loss. Now, it's converse. If you thought the NASDAQ were going, let's say the S&P were going lower, you could sell it, and if it went down and touched the floor, all right, you sold it and the price went lower and it touched the floor, you would get knocked out for your maximum profit because, hey, you thought it was going lower, you sold it, it actually went down, touched the floor, you get your maximum potential profit. On the flip side, if you sold it and it went up and touched the ceiling, you would get knocked out of your trade for maximum loss. You thought it was going lower, you sold it, and instead it went up. So you're trading the price of the underlying and you've got parameters around it, a range where you would get knocked out of your trade, either for a profit if your prediction is correct or for a loss if your prediction is wrong. Okay, if you got any questions on that, please fire them over to Sophie. Now, if a knockout doesn't touch either the floor or the ceiling, all right, it's got this range and it trades sideways or it goes up and it goes down, but never touches the floor, or never touches the ceiling, it will settle at a price. So there is an expiration. Ours are all weekly contracts, so they settle on Friday. And as such, if it settles in between the range, your profit or loss would be the difference between where you bought or sold and where it settles. But going into the trade, you knew your maximum potential profit and your maximum potential loss. And if it settles in between, you would have a partial profit or a partial loss, depending upon where it settles and where you bought or sold. Okay, now, before I jump over and show you some examples and we start looking at it, and it is much easier to see, I like to say, my mom is from the great state of Missouri, the show me state. When I show you, I think it really is, particularly on our platform, we make it very easy for you to visualize where a product needs to be for you to potentially make money or lose money. It is very visual and it helps you along the way. Now, when you are trading binary options or knockouts, it doesn't matter which one, there is an important rule. And I have been talking about how a contract would settle. A binary option either goes to 0 or 100 in the end. A knockout will knock you out at one of your boundaries at either the floor or the ceiling, or it will settle at a price in between. But just because there's a settlement time with the contract does not mean you have to wait until expiration to see what happens. All right. You can day trade these if you want, or you can exit your position early if you want. You can choose to exit the position to lock in profits or limit losses prior to expiration. In fact, a lot of successful traders with binary options and knockouts will get out of their position early and either, oops, I was wrong, I'm going to limit my losses and not experience maximum potential loss, or they're going to take some type of some type of partial profit, meaning, hey, I thought this was going to happen. It did. I'm not looking for the maximum. I'm not looking for it to go all the way. I'm willing to take a certain amount of profits and say thank you very much and move on to my next trade. Okay, so that's an important component. That is a very important component, and I want to make sure that everyone does get that. You do not have to wait until expiration. You can exit the trade early. All right, and I'll show you that. Okay, and lastly, I just wanted to put this back up for anyone who might have come in a little late. We are here to help. Customer service at nadex.com. Email us. Follow us on social media. Again, I would highly recommend the Nadex YouTube channel and subscribing to it. We are constantly pushing more video content out there. Some of it's long form like this, where it's an 45-minute to an hour long webinar. Some of it is 2 minutes, daily little market updates before the open. And you're going to see a bunch of more content out there where we're going to be trying to help you. We're going to be trying to help you and try to give you, because the truth is, if you're successful, we're successful. So we want to make sure that you've got the tools and information and resources you need. And again, if you need any help or if you've got any questions, please reach out to us. Okay, I am now going to jump over to the platform and we're going to have a little bit of fun. Oh, and for those who joined late, I did want to mention again, we do have this Predict the Dow contest. It's an easy thing to do. In fact, here, I'm going to go ahead and chat out the, because I know that if you came late, you won't see that, so I just sent it out again. There's the link. You've got until Monday to make your prediction. This costs nothing to do. It's just a little fun for the election. Predict the Dow. You put in your name, your email address, your phone number, and where do you think the Dow is going to close on November 4th? The election's the 3rd. The 4th is going to be probably an interesting day. At the end of the day, whoever's prediction is closest will win $5,000. Now, we do say it's the opportunity to win $5,000 because if 2 people happen to be at the same price or equidistant, the prize would be shared. But you've only got until Monday. So definitely make your prediction. It costs nothing to enter. And the one caveat is you do have to have a Nadex demo account for your prediction to be a valid prediction in the contest. If you've already got a demo account, be sure to use your existing email address for that demo account. And if you don't have one, it's very, very easy. It takes a few seconds to open a demo account. And if for some reason your demo account is locked, reach out to customer service. Just reach out to them. They will help you. Okay. I am now going to go over to our platform. And let me just make sure that you're seeing what I'm seeing. And indeed you are. Terrific. And again, I want to point out if you've got any questions as we go, if anyone would like a copy of today's slide deck, let Sophie know. She will get you a copy of today's slide deck so that you can come back and review this at your leisure. You know, it is kind of helpful to be able to do. I know people like to listen to these and then come back and review them in due course. Before I get into the platform, I also want to point out, all right, if you aren't doing it, on our website, you come to our learning section, I would really recommend you check out our webinars section. One, we put all of our upcoming webinars in here so you can always register for one. I think we've got them out through the end of the year, and we still have not, we've got a bunch more coming up in November. I'm just going to tease it out there. While we have the Predict the Dow contest, we are going to be having a trading challenge coming up. So stay tuned for that, where, again, it'll be a trading challenge in the demo environment, and the person who performs best, there will be cash prizes, I think, for first, second, and third place. So be on the lookout for that. The other thing I'm going to mention is we do have our archive of recordings. You can always jump over to the archive and catch any of our past webinars, but those are also all on our YouTube channel. I recommend actually going there. And you know what? It hasn't been published yet, but you will also pay attention to this page or your communications from Nadex. Monday, we're going to actually have a special election webinar Monday morning. You'll be seeing that come out. You will see it show up in this section. We've got Guy Adami and Dan Nathan from CNBC's Fast Money, and they are going to be talking trading the election. So I'm telling you that's coming up on Monday, trading the election with Guy Adami and Dan Nathan. That actually will show up probably today. You'll be able to register for it here, and we will be sending some communications out on how to register and join that webinar. But it will be a great opportunity to hear directly from Guy Adami and Dan Nathan of CNBC's Fast Money on trading the election. Okay, now let's get into binary options and knockouts. I'm logging into the Nadex platform. I am going to use a demo account. Remember, again, nothing I say today should be taken as a buy or sell recommendation. This is strictly for your educational purposes only. We are going to start with binary options, and I just want to see something quickly. Perfect. Okay, with binary options, we do have binary options on indices, global indices. All right, so you can be trading global markets if you were interested in the FTSE, the DAX, which is the German 30, if you the Nikkei in Japan. We do have the U.S. indices, U.S. Tech 100. That is for the Nasdaq index, the U.S. 500 for the S&P 500. The Wall Street 30 is the Dow Jones Industrial Average, and then the small cap is the Russell 2000. So we do have a variety of binary options on indices, as well as foreign exchange. And notice all the pairs we've got, and look at the different times we've got. Okay, hourly, daily, weekly. There are plenty of choices. We have commodities. All right, crude oil, gold, nat gas, and silver. We've recently added nat gas and silver. And then, I did mention these other shorter durations. Now, the reason I mention these is I want to do a little demonstration here. And I am going to do it in our 5-minute binaries. Okay. The reason I like to do the 5 minutes is because it really, it amplifies the effect of what's going on in binary options. Now, all of our 5-minute binaries are in currencies. So let's go ahead and I'm going to pick the Aussie dollar because it's the top of the list, and I'm just going to populate the chart, and I'm going to hide it. And we've got a nice chart here of and let's just go ahead and look at a daily chart, and let's shrink it down to 1 minute. And I am going to really focus in, and this is a 5-minute binary option. We've got it's the Aussie US dollar. It's going to expire in 4 minutes. And again, that's a very short time frame. We don't have to do it like this, but I wanted to show you. You can see the price of the Aussie dollar right here on the right, and it's as it moves around, the price of the different the different strike prices are going to trade around the probability that this statement is going to be true. So let's go ahead and pick this one where it's right at the money, the 70.11, and we can see, will the Aussie US dollar finish higher than 70.11 in the next 3 minutes and 15 seconds? Now, because the price is, now look at that. As soon as the price dropped below, the probabilities of this, and if I highlight it, if I think this is going to be yes, you can see how the probabilities move very quickly. It went from 40% up to 60%, and that is because it is now above, but it went below 50 because you can see the price went below 50, right? And as the price gets down around here, you're going to see this trade around 50%. The strike down here, 70, this is almost, the market's pricing this as a lock. Now, if I thought that this was definitely going to stay above, I could buy this. And if I were to buy it, let's just say at 62, and look at it, it's ticking around so quickly. I know getting into it what my maximum potential profit or loss are getting into the trade. Now, if I thought it was going to settle below here, let's say I think it's going to, and this is not a buy or sell recommendation. I'm going to go ahead and sell one. Oh, you know what? Yep, I did. Okay. Now, by selling one, and I think I sold it at 53, okay, I know that the most I can make is 53. I think it's going to settle below, and you see how on the chart where it would have to settle for this to be a profitable trade for me. I would need this to actually settle down below here, and I would make $53. If it settles above 70.11, it'll go to 100, and I'll lose $47. All right. Now, so I'm predicting that it's going to go below. Now, this probability will move pretty quickly as the price, the underlying moves, and you're watching as it goes. Now, if I decide I'm wrong, all right, because there is only a minute and 20 seconds left, and you know what? Forget it. I'm wrong. Okay, I could just buy it back and take a partial loss. Okay, so I actually just did. I bought it back, and notice my positions is now empty. Again, not a buy or sell recommendation. I bought it back and took a partial loss. I did not have to experience maximum loss. Now look at that. Had I done nothing, maybe I would have been right, maybe I would have been wrong. But you are going to notice as we get closer to about 20 seconds to go, you'll see the prices of these clear out. Now, why is that? Why would people not want to trade in the last 20 seconds? And the reason that is because this is binary. It's either going to go to 0 or 100. And it looks, and we'll see here, we still have 24 seconds. We'll see where this is going to actually settle. And in the next 17 seconds, isn't that amazing? It's now trading just above there. There's still 9 seconds to go. Now there's 6. I just want to see where it's going to be. Oh my God, it's right at the price with 1 second to go. And it looks like it actually settled exactly at it. That is crazy. Now, because the question is, will it finish higher than 70.11? It didn't finish higher than 70.11. It finished exactly at 70.11. That contract went to 0. That contract settled at 0. I had sold it. I did not need to buy it back. I would have actually had maximum profit. But as I mentioned, a lot of people will take their positions off before settlement because of the dynamic nature of what can happen right at expiration. It can move, and you're now notice the next set of these came up because a new 5-minute clock started ticking. And look at the probabilities now. This 70.11 strike, I mean, we have this massive down bar. This one that was trading up in the 90s is now trading around 50 because the price of the underlying Aussie is now right at this strike price. And this contract has 4 minutes to go. All right, so hopefully you got a taste of that. Was binary options in a very dramatic market. All right, where you're in 5-minute binary. Some people want that excitement. Some people want that price action. Every 5 minutes, a new set ticks off. If that's a little too much for you, you can certainly choose here. I'm going to choose the Nasdaq 100. So if you trade tech stocks, here's, let's, what is going on? You know what, sometimes because I'm in demo, it's a demo environment isn't perfect. I will tell you, it does stream the live prices, but it is a demo environment. Your experience in a demo environment will not be the same as a live environment. When you are in a live environment, there are many eyeballs. It is also an entirely different system. It's a production system. So it will necessarily be different, but the prices you see here. So I'm going to go ahead and actually choose the S&P 500, and this is the daily one. There's 3 hours to go, so it won't tick around as much. So I do want to just show you if, and look at this right away. We're getting a move here. But you're going to watch these probabilities, and let's actually back our chart up. I'm going to show you a little function, a little fun. I'm going to change my chart to a weekly chart, and 1 hour is fine. And let's just take a look at what's been going on in the NASDAQ as of late. And this is some of the nice things you can do with Nadex charts. First of all, you can see in the last couple of days, it's clearly been in a downtrend. You can draw on our charts. Okay, I'm going to go ahead and do a trend line just to give you an idea. I'm going to rough it in. We can see that it's distinctly been in a downtrend, right? There's no question about that. It looks like we're kind of hovering in this level for the last little bit. I mean, still some volatility, and I would expect to see that going into the election. You can do some fun little things. We've got a variety of technical indicators. The nice thing about all of our technical indicators, if you don't know what they are, so for instance, if you like Bollinger Bands and you weren't exactly sure what they are, we've got in-platform education that tells you what a Bollinger Band is, and it's trying to give you an indicator based on moving averages. And you can always change the parameters, but there are default parameters. And it tries to give you an idea where you might see breakouts or support levels based on standard deviation moves. So if I click on Bollinger Bands, you'll actually see where you might potentially see some resistance or some support based on that. Now, if you wanted to change the parameters, I click on Bollinger Bands, and you can adjust how it displays, the number of periods, the number of standard deviations, and hit apply, and you would modify your Bollinger parameters. So it's nice to have some of these features. Let's put on our drawing tools. I'm even going to show you a very quick and easy Fibonacci retracement. Again, if you're not familiar, Fibonacci is a ratio. They call it the golden ratio. It's a ratio seen in nature. It is a ratio that's seen in the human body. It's seen in architecture. And it's a lot of people then say, well, if these are naturally occurring patterns, we might see that in the stock market as well. And it will give you, it identifies certain levels, again, where you could potentially see some support or resistance. And you can modify all that. Let's go ahead and draw a Fibonacci. Since we're in a downtrend, the way it starts is I click once in the upper left-hand corner of the trend. And then I'm going to pick a point here at the bottom where it's really bottomed. So here's the bottom of the trend. And then I can extend this out to the right so that it'll cover more of the chart. So 1, 2, 3 clicks. Upper left, lower right, and then I extend it out. If I were in an uptrend, it would be exactly the opposite. I would start in the bottom left, go to the upper right, and then extend it out. Now let's take a look. I'm going to zoom in now and see what we've got. I've zoomed in very closely. In fact, we could probably zoom back out a little bit, and let's take a look at some of the binary options in here. And I'm doing this so we can see the strikes. You can see that the price of the and here's my question: the S&P 500, will it finish higher than 32.93 at the end of the day today? Yes or no? Here we are. We are right at this level, so it's right around. It's just above 50, right? And we can actually see that this dotted line is the price. These other lines are, and I'd actually have to zoom out for you to be able to, we are gonna have to do it this way. I want to be able to see my percentages, so they're all off to the left. But you can see these dotted line, this solid line, this dotted line, this dotted line, places where you could potentially see support or resistance. We would expect to potentially see some resistance up here. Interestingly enough, this is the support level down here, and here's a strike that's in between. You know, maybe this isn't the right now. Fibonacci isn't going to give you any help at the moment, but if it got near one of these levels, it could potentially, you know, help you in deciding whether you wanted to buy or sell a particular binary option if there was a strike price right near. So if we were thinking something would happen at this level right here, which is this dotted line up at 33.20, if it got up there, you could potentially trade one of the binary options that was near it. So that's actually how you would use Fibonacci with binary options. All right, hopefully you've been firing questions off to Sophie. I am now going to jump over to knockouts. All right, I would definitely want to show you some knockouts. For knockouts, I'm going to go ahead and use commodities. And let's, just because I mentioned it earlier, let's take a look at gold. And I am going to just pick a knockout. All right, and I am going to actually clear all of my drawings so we aren't confused here, clear all of my indicators. Let's just take a look at what's going on with gold. All right, and I'm going to, that's fine, we got a chart here in gold. It looks like gold too has also been in a little bit of a down pattern. And on our knockouts chart, notice on the left-hand side of the chart, we've got 4 blue lines. All right, those are the knockout levels. So I am going to just pick one by clicking on it. When I do that, you now see, here's the price of the underlying. All right, that's that solid gray line. And you can see the price of this particular, the range for this knockout. 1859 is, let's go ahead and do this. 1859 is the floor. You see that on my ticket. I also see that on the chart. 1909 is my ceiling on the chart and on my order ticket. Now, if I thought gold were going to bounce here, gold has been in a downward pattern, and maybe I thought this is where it's going to see some support, and I'm expecting it to potentially rally from in here. If I were to buy one, I'm trading a price level. Notice that the prices I see, 1867, 1868, 0.1 and 1868.3, they're right around the current indicative price. Okay, so this is what I mean when I say it's a Delta One product. I am trading this price right here. And if I thought gold were going higher, I could buy here. So let's just say I bought one at 1868.40. All right. If I were to buy one and I were wrong, and gold went down and touched 1859. It got close earlier today, but it did not touch there. But if it did, I would have gotten knocked out and I would have maximum potential loss of $94. If I bought gold in here, I could not lose any more than $94 if I bought one contract. Now, if I were correct, and so let's go ahead and I'm going to zoom in a little bit. If I were to correct and it were to rally and get all the way up to 1909, my maximum potential profit would be $406. Now, if I bought this contract, let's buy it at 1868, nice round number, right? If I bought this contract and it goes down and it blows through to the downside, 1859, it drops down to 1850. I cannot lose any more than the $90 I knew when I got into the trade. Okay, I can't. I know that this is my floor, this is my stop loss. If I bought at 1868, I cannot lose any more than $90 because once it touches 1859, I am knocked out. Now, if it touches 1859 and bounces back, I got knocked out, and that's unfortunate, but that can happen. Now, on the flip side, if I bought it and it went up and it went through 1909 And as we saw, gold was earlier or late last week. I mean, it was up at 1930. It doesn't matter. I cannot make any more than $410. My profits would be potentially capped at 410 because as soon as it touched 1909, I would get knocked out for maximum profit. So essentially what I've done here is you're buying it because you think it's going higher and you've got a stop loss and there's no slippage. You're knocked out of the trade. It touches there, you're out. You can't lose anymore. You got a profit goal. Maximum profit, you get knocked out if it touched up there. And if it went any higher, you wouldn't make any more money. That's your maximum profit. Now, again, just because there's these prices and because there's a settlement time that's out one day, if I were to buy this at 1868 and it went up to 1880, I could certainly take a partial profit. So maybe I think it's going to buy, let's go ahead and just buy one for fun. All right, so I just bought one, and now I bought one for 1868. Again, not a buy or sell recommendation, but I think it's going to get back to 1880. I just think for some reason there seems to be a level here. I can place an order, and I'm going to place the order above 1880, okay? Because I think it's going to get back up here. I can place an order to sell it up there. And notice in my positions, I bought one at 1868. It shows me in my position pane where I bought one, and I've got an order to potentially sell it up at 1880. Now, the one trick here, if it trades down to 1859 and I get knocked out, I would want to cancel this sell order because I no longer have it. I would have gotten knocked out. But I can place a limit order above to take some partial profits. I do not have to wait until expiration to see what happens. Now, again, as I mentioned, I bought one here at 1868. If it does not touch 1859 in the next one day, but it trades down here and settles below, I will have some type of, let's put 1868 in here. I want to make sure we have the same price. Since I bought it at 1868, I know my maximum loss is 90. If it were to trade down but not get to 1859, I would lose some fraction of $90. All right, somewhere in between. Now, if I bought it, because I'm not saying if I bought it, and it were to settle up in here above, I would have a partial profit, knowing that my maximum profit would be 410 if it were to get all the way back up to 1909. So that is knockouts. I have defined risk, defined reward. If I think it's going up, I buy. If I think it's going down, I sell. Okay, and I can always exit my position early if I want, if I choose to, and I could do that to limit losses or lock in gains. But knockouts are delta one. You are trading the price of the underlying with some distinct boundaries around it. Now, if I wanted to have a different risk reward profile, I could always choose to trade a different knockout. Right, here's one that the price is currently right in the middle. Okay, so you'll notice that my maximum potential profit and maximum potential loss are a bit different. Let's say I thought gold were going lower. All right, I think it's going to continue this downtrend. This is where you might choose a different one. All right, I might choose to sell this one. All right, where I think the price of gold were going lower. Okay, because I think it's going to continue its downtrend. Now, notice by selling it, if it were actually to rally up to 1879, that's where I would get knocked out for my maximum loss of 116. I couldn't lose any more than 116, but I sold it. I think it's going lower. I think it's going to continue its downtrend. If I'm right and it gets all the way down to 1829, I know what I could potentially make, $384. But again, you can choose. If I think it's going up, I buy. If I think it's going down, I sell. And I choose the knockout. There will always be 4 of these over here, where the risk reward profile suits your opinion. What kind of risk do I want to take? What's my maximum risk here's one where it's in between. Do I want to be buying this and risking 290 to potentially make 210? Do I want to sell this to risk 213 to potentially make 287? What do I think gold's going to do Is it going to continue its downtrend? Is it going to bounce? Again, we've got tools. I mean, here we go on the charts. It's been in this downtrend. We've got technical indicators to help you. We've got drawing tools to help you. And you can certainly put those on your charts and make your chart look however you would like it to look. All right, the one last thing I do want to go before I let you go today. Again, if you'd like the slide deck, please let Sophie know in the questions. We'll certainly get you the slide deck. This was recorded. It will be available on the, you know what, let's go ahead and bring up the Nadex website. It will be available both in our webinars section of our website. It'll be in the archive. Be sure to check out upcoming ones. Again, I'm telling you Monday, it's not there yet, but there will be a special webinar with Guy Adami and Dan Nathan of CNBC's Fast Money talking about trading the election. So please pay attention. There will be communications coming out. And lastly, if you haven't done it yet, predict the Dow. It's a fun way to have a little bit of positive excitement with the upcoming election, a chance, and here I'm going to put this out again, a chance for you to potentially, a chance for you to have the opportunity to win, potentially win $5,000. With that, hopefully I answered all of your questions today, or at least hopefully Sophie did. Thank you for joining us today. Be sure to check out the webinar section. Join us for upcoming webinars. The recording will be on YouTube, and I do want to wish everyone good luck in the markets.